Hi there, very good morning and welcome to everyone to this Money Control live stream. You're watching Opening Bell with me, Stacy Pereira. Let's give you a quick setup of what the trade will look like today. Well, Indian equities are set for that range-bound session, we could say, on Wednesday. But we are seeing the GIFT Nifty, which is signaling a muted start for the Lal Street. But if you go by what happened and what transpired overseas, where Wall Street, all the three major averages there closed lower on Tuesday, and we also saw higher treasury yields along with those soaring oil prices, which are really weighing in on sentiment, and that is also reflecting in Asian markets otherwise, where trade is quite mixed range across the Asian indices. They're also mixed because we're looking at some inflation concerns that have been stoked now because of these higher crude oil prices. As for the trade setup, let's also tell you how foreign institutional investors and how much they are looking at the Indian markets. Well, they went on to sell about 1,725 crore rupees in Indian equities, but the domestic institutional investors, or DIIs, are the ones, the bigger buyers, and they've bought about 1,077.86 crore rupees worth of stock as of September 5th. This, remember, is the provisional data that we get. So that is pretty much the setup of what we have in store for us here today. We are definitely also seeing the party really in the mid-cap space, because that index has gone on to touch new record highs in yesterday's trading session, and that's where we're seeing most of the action, even though the large caps are trying to gain some kind of momentum after that correction or that consolidation that we've been seeing in some time. So will the Nifty really surpass those levels? We did see it cross that 19,550 levels yesterday. Can it, that upward momentum, continue is what we're really hoping for and waiting to see, even for that matter the Sensex. But like I was pointing out, the mid-cap, the broader indices is where all the action is at this point. And let's discuss that further. And joining me to do that is Rajesh Palviya, the Senior Vice President of Research and Technicals and Derivatives at Axis Securities. Good morning, Rajesh. Thank you so much for giving us your time. Like I was pointing out, the mid-cap party seems to have really taken off, and it's continuing rather, because we're seeing that euphoria and enthusiasm even in the kind of IPOs that we're seeing come mostly in the SME space, mostly from this. So we'll talk about IPOs later, but first you tell me how we're looking at the levels for the Nifty at this point and also the mid-cap going ahead.
Good morning, Stacy. Yeah, so mid-cap stocks are doing well, and the kind of rally which we are seeing in most of the mid-cap, small-cap stocks are really giving us sign that, there is a confidence on the broader market, and the participation is continuously taking a bet on the bullish side in the market. So we do expect that, yes, as the Nifty is very well holding its important support area. Even in the decline in the month of August, the Nifty took the support from 19,200. That was the important level on the downside. And we have seen a significant recovery in last couple of trading sessions from that level. In the Nifty, yes, 19,500 is the immediate support area for near-term setup. If you are taking a trading bet, your stop loss should be at around 19,490. That is the important support area. If you look at the data also on the derivative side, most of the call writers have covered their writing position of 19,300, 400, even 19,500 strikes. That clearly shows that, there is a confidence for market to move further higher. So we expect Nifty to continue further more upside towards 19,650. That is the level where we are projecting. One can initiate buying in a 19,550 call option, which was...
Rajesh, you'll have to hold your thought there, because let's address the market open. What we are seeing, that little bit of pressure on the benchmarks at least, and that was expected, because if you have to compare them to their Asian peers, or even if you have to take that handover from Wall Street, we did see the major averages there also down in trade after they got back from that holiday. So the Nifty, they're pretty much unchanged, holding on to the 19,500 levels, we can say. Just about, really small minor changes, but we'll have to give that time to see whether this really manages to pick up from here. But the Bank Nifty, if you look at that counter, that one yesterday also took a bit of a hit. That one with the financials really dragging. Today also again back at that 44,500 levels, but at least trying to get on to that levels. Mid-cap, yes, like we were talking, still above that 40,000 levels. Yesterday is when it reached that record high, and now continuing the upward momentum. We can say 200 points already upwards to that. Small cap too comfortably in the green at this point. So broader markets really is where the play is, at least at this point, even though the other ones are correcting. Let's look at the IT space. That one also, even after being a major drag or seeing some kind of profit booking that we saw in these past few days, now comfortably in the green. But the metal space, that one down about 0.2% on your screens, that counter. And this could be from all the reactions that we're seeing in China and otherwise. The pharma space also a buzz after that Cipla deal, and likely to happen. More contenders looking at getting into the space, so that will definitely be something that will have investors interested in. Consumption play also up there by about just 0.01%. So some bit of traction coming in there even for the consumer names, and that's perhaps the overall picture, even though we've got reports about deficit, monsoon deficit and otherwise, with the Niti Aayog also pointing that out. Maybe that will come into play in the coming quarters, and which is why we're seeing that. Similar with the auto counter as well. That one seeing some bit of pressure, and that likely happens in the initial few days of the month, because just post the auto sales data is when you see a good euphoria in those auto numbers, but the auto index there down about. Let's also bring up on your screens the gainers and losers in trade today. There among the top gainers, ONGC, Cipla, Power Grid. Cipla, of course, after all of that buzz to do with the people vying for its stake. Those are a couple of your gainers. Wipro also, they're making it to the list. Bharti Airtel, NTPC among others. Hero MotoCorp, ITC as well as Sun Pharma. So Sun Pharma also there in that pharma space. We are going to see a lot of action there. Perhaps is where people are shifting their focus now, because they see there might be some bit of correction that has come in. Let's also address the losers. What are the top losers there? Hindalco in the metals back, and we've seen metals kind of get hammered out of shape, we could say, because there was quite a build-up rally that was there, because you saw good that stimulus from China that really aided most of the commodities, and especially base metals also, which were trading at month's high. So Hindalco there in your losers list. You have Nestle, also Asian Paints, a couple of these consumer names that are coming in the losers list. IndusInd Bank, Coal India as well as BPCL there are the ones in your top losers. But let's look at how these will play out during trade. Now we do have that setup already put out there for you. The Nifty looking to change and make that correction in terms of the momentum that it's going to. Let me bring back Rajesh now and ask him how is he reading these numbers. They're pretty much online with the resistance and supports that he was talking about. So is this likely to continue, Rajesh? What are you making of these numbers or the open that we're seeing?
So yeah, we expect that Nifty can move further higher towards 19,620 to 19,640, which is the immediate resistance area. So we are bullish, and we expect one can buy 19,550 call option, which is closing, which is trading now at around 62 rupees, and we are projecting target for this call option at around 100 to 110. Keep your stop loss at around 35 rupees. So Bank Nifty may remain in consolidation, but Nifty is showing strength. Some of the sectors like pharma, real estate, as well as metal, these all and IT, these are all sectors are supporting at this moment for the index. So we expect this sector may continue furthermore, buying action. So from that space, from pharma, we are bullish on Aurobindo Pharma, and we expect that Aurobindo Pharma can move up, and the kind of long build-up was there in previous session can take this stock further higher towards 885, 890 zone. So one can buy Aurobindo Pharma also at this moment. Info Edge is also looking attractive. One can buy Info Edge also for upside target of 45, 80, 45 for 90. Keep your stop loss at around 44, 65. So these two stocks are looking attractive after this today's opening.
Right. Rajesh, do stay on with us. Let's address a couple of stocks that are going to be a buzz in trade today. One for sure will be Jio Financial Services, and that's because it's going to be removed from the NSE indices, including the Nifty 50 come tomorrow, September 7th. So that stock will be excluded from the Nifty 100, as well as 200, Nifty 500, Nifty Energy, Nifty India, Manufacturing, as well as 13 other indices. So it will be interesting to see what really, because we've seen quite a bit of action in that stock, especially because it took that long for it to come out or be excluded from this, because it kept either hitting lower circuit time after time, and then afterwards hitting upper circuit, and then there had to be a revision in the filters as well. So let me get in Rajesh and ask him, how is he looking at Geo Financial Services? Is that, consolidation, or that time to where it's actually figured out where it wants to be, its place in the market? Is that the right time now for it?
See, there is a limited data setup to analyze the stock on the technical basis, but whatever data we have for last 15, 20 days, 10, 15 trading sessions. So it shows that, there is a support buying action may again come in the stock towards 240 zone, which is the important support area on the near term. So if it continues to hold about 240, then again, stock may attract a buying interest. Once the stock again may cross to above 260 zone, then it will resume its uptrend, and then possibly next target for the stock towards 280, 290 on the positional basis. But those who have bought or those who are willing to buy the stock in this corrective move, which we are seeing, one can buy around 240 zone, keep your stop loss around 235. And on the higher side, 260 is the first target. If you crosses those levels, then you can hold your position for 280 to 290 also.
Right. Another stock that will be a buzz is Voltas we are looking at. That's after Motilal Oswal has initiated a coverage. Long-term prospects, they say they support with a buy rating of and a target price of about 1,000. Rajesh, what are your views? Do you think, now especially, normally you see these stocks a buzz in the peak of summers and otherwise because they have different reasons for it. Though now we're looking at, they are stronger growth prospects as well with, they are looking at their targets of profitability by FY26. So how is one supposed to be looking at this particular stock?
So stock was in downtrend, but since last couple of weeks, there was buying interest at lower level, and stock has started recovering from its recent low. Stock almost formed a double bottom sort of formation on the weekly chart. Now looking at the recovery on the weekly as well as on the monthly setup, we expect that now if stocks continues to hold above 850 zone, then possible upside target we can expect in the near term to short term towards 940, 950. So it's a slow mover, low beta stock. So one can buy and accumulate gradually, and in the dips also keep your stop loss at 840, at 50. And looking at the near term setup, yes, there could be further more upside in the near term as well as in the short term. So 940, 950 is the target on the higher side.
Right. Rajesh, you did give us a couple of picks. Is there anything else or any particular sector that one needs to be looking out for, or even stocks that they need to be keeping an eye out for at this point?
So Coal India is also looking very attractive. Strong buying action is taking place. The stock managed to give breakout of triangular formation on the weekly chart. So one can look at Coal India for upside target of 265 to 270. Keep your stop loss at around 252. Another stock that we like at this current juncture, that is CDSL, though some profit taking is happening after the opening, but still stock has already given a breakout of its falling channel on the daily chart. The strong buying action was there in previous session. Looking at overall setup for CDSL, we expect CDSL can exhibit further more bullishness going forward. Our target is 1280, 1300 on the high side. Buy and accumulate this stock with stop loss of 1180. And the third stock that we like at current juncture, that is NMDC. NMDC is also looking attractive, strong buying action in last couple of trading session. Though stock is now showing some profit taking from its today's high, but if you get any opportunity to buy around 140 is a buying opportunity. Keep your stop loss at 138. Again, we expect that target on the high side towards 148, 150.
Right. Thanks so much, Rajesh Palviya. They're giving us his picks this morning, and quite interesting to note the variety that he's put out there for us. Thanks so much, Rajesh, for your time. But let's also look at India's fundamental picture. And of course, we are just a week ahead of that G20 meet. There's a lot expected to come out of that. India's G20 presidency has seen about 200 odd meetings take place, and it has really put India in that pole position, one would say. But how much of that will really transpire into our markets, into the inflation picture? What all is really riding on this? We'll have to discuss that further, and how much of that will really play out even in the markets. And to do that, joining me now is Mayuresh Joshi, the head of equity research at William O'Neill India. Good morning, Mayuresh, and thank you for giving us your time. Like we were saying, there's a lot in store. G20 presidency, that huge meeting. We're seeing so many big leaders come into India, but we also have the overall picture where we're seeing inflation really play out in different ways. Yes, it has somewhat eased out, but it could definitely, with these rising vegetable prices and the deficient rainfall that we are seeing in some parts, that could have a different picture to tell. So how is India really positioned at this point?
Morning, Stacy. Pleasure to be on your show. So two aspects here. If you look at the global picture per se, I think the inflation picture is rearing its ugly head again. You saw a very ugly print out of Korea. You've seen an ugly print come out of Indonesia as well. And therefore, I think the expectation that's largely building up is that with crude touching $90 per barrel as we speak, the supply chain concerns when it comes to food and the crude-related aspects might prop up inflation concerns once again. Obviously, I think the kind of macro concerns you're seeing in the US market, the yields have shot up significantly higher. And therefore, I think with core inflation remaining sticky, both in the US and the European markets, global supply chains, both related to food inflationary concerns and crude concerns, are propping up again. When it comes to the India context, Stacy, the GDP first quarter print was the best among all economies in the world. The fiscal deficit is very much under control. Tax collections have increased and the buoyancy probably continues. With global supply chains, there is a possibility in terms of demand actually coming off a tad bit as far as our exports are concerned. But services exports should still hold out, in my opinion, over the next few quarters. Though I think a lot of export-related items when it comes to engineering, other goods, might see some element of softness, which can probably get played out. But to that extent, the Indian economy probably stands out on all these parameters. On our domestic front, yes, the El Nino and deficient monsoons probably can cause a concern in terms of how food inflation will play out. And with all these aspects, what kind of a stance will RBI take? They've already upped their inflation guidance for the second quarter and for the whole year as a consolidated basis as well. But generally, I think the supply chain issues are being addressed as we speak from the government side as well. Cereals pulses is going to be a cause of concern, but how the government probably addresses it, they've already started supplying rice and wheat stocks into the market. And therefore, I think if monsoons come back, fingers crossed for the next 2 to 3 weeks, I think a large part of that concern can be probably taken care of. Crude at $90 is a concern, but to a large extent, we are in a position at this point of time to buy crude in rupee terms. That takes some concerns off in terms of the dollar payments that go out. In fact,
Mayuresh, I was going to ask you to, further elaborate on how it really impacts India. Crude being at $90, does it give us that much leeway? Because, of course, we're also seeing palm oil prices here in India, not just prices, the imports have touched, new levels of highs. Just yesterday, we reported about how that too has touched record levels, and we're already seeing vegetables gone up, soaring. So that means we are going to see a prolonged period of more sticky inflation because of higher crude prices. And what are the other kind of headways? We're already seeing Saudi and Russia both saying that they are going to further, extend those voluntary cuts. We are looking at stockpiles in the US, somehow depleting. So there is that mismatch which is somehow trying to be addressed, but we are still seeing prices really soar. So what could really change that situation then?
To a large extent, if you probably look at the equation that has been taken into account, both from an RBI and the Ministry of Finance perspective, they've largely taken into account crude staying anywhere between 80 to 88 and 90 odd dollars. So I think if that probably stays in a range as we speak, I think we would be far more comfortable in terms of our estimates that we have built up from our exchequer numbers for this year is concerned. If it starts shooting higher, obviously I think the pass-through effect is something that the markets would like to see. But being an election year, 5 state elections and general election next year, I think it might become a little bit difficult for it to get passed on to the end consumer as well. To that extent, OMC companies might actually take a hit in terms of their EBITDA without inflation being actually passed through in terms of the end consumer as well. So I think that might address inflation concerns to a tad bit. On the food inflation part, as I discussed, the government has already started doing supplies as far as rice and wheat is concerned out of its food stocks from FCI. Pulses cereals remain a cause of concern, but the government, I'm pretty sure, will be on top of things. And if rains are actually deficient, as we see in September as well, I think even those supplies will start coming into the market to probably address these food inflationary concerns as well. So it might remain a concern with crude staying above 90 odd dollars, both in terms of crude and the food inflationary weight. But I think supply side issues will get addressed by the government to offset these concerns to a large extent.
What about the metal space? We are seeing a lot of action even there. We are seeing China and those stimulus measures that it has put out. But steel stocks really, either they're swinging really. So how is one supposed to be looking at that sector specifically?
So 3 aspects here. One, I think the Chinese demand has come off the cliff. And as we speak, the real estate problems are still continuing. And therefore, the entire destocking process that has probably happened means that inventory levels are at absolute low levels. And because of that, the realization that LME remain extremely low. However, in the past few weeks, input costs have started inching higher, both coking coal and iron ore costs. And therefore, HRC prices have been increased by almost 1,500 rupees a ton. The third aspect in terms of demand in the domestic context remaining extremely strong, whether it's the capex by the government related to infrastructure, construction, railways, or even the private capex expected to hold up, which means that volume-led price growth might continue. A lot of companies have deleveraged their balance sheet to a large extent. Capacity additions might mean some element of leverage being added in, but still relatively better compared to long period averages. And therefore, I think the expectations in terms of a China stimulus has propped up this index to a large extent. But domestic-oriented steel companies, in my opinion, because of all these factors at play, will still keep on doing well. JSPL, Jindal Steeless, Tata Steel JSW Steel should continue.
Right. Your view on the pharma space, because that's also another, side where we're seeing a lot of action, a lot of M&As that are expected, and we're seeing consolidation. Just if you talk about Cipla, also they've just recently acquired somebody, but there are bigger players who are looking to acquire Cipla, and they're tying up with even big global PE names for that matter. So how is one to be looking at the pharma space at this point?
Looks interesting because the tide has probably turned, Stacy, for the sector as a whole. In a periodicity where they had pricing issues a couple of years back, FDA concerns, no approvals coming through, and therefore taking a hit on their top line and bottom line. A lot of things that have probably transpired in the past few weeks and months, with a lot of FDA approvals coming through. A lot of these companies are now having approvals for complex generics or niche specialty products as well. And that really boosts both their top line growth in terms of the addressable market that they've got, and the margins as well, because these specialty products carry better margins compared to the rest. If you go by the commentaries of most pharma companies, they're sounding very, very positive. Under-owned sector a couple of quarters back, and therefore I think the kind of interest that has probably come back because of these factors clearly getting reflected in the price. We at Markets for India, and as per our global focus list, continue to remain optimistic on stocks like Cipla and Dr. Reddy's.
Right. Well, thank you so much there, Mayuresh Joshi, giving us his views and also the views on different sectors and how they could be playing out in the days to come for how markets are transpiring. Thank you so much, Mayuresh, for giving us your time there and speaking with us live here on Money Control. Well, also there is a lot of activity that we're seeing in the primary markets, and IPOs have been a buzz. In fact, just this week alone, we're going to see about 4 IPOs as well as 4 listings. And one of those happens to be Jupiter Lifeline Hospitals, which will be initiating its IPO or opening its IPO for subscription today. And remember, this multi-specialty hospital plans to raise about 869 crore rupees via a fresh issue as well as offer for sale. Now, if you look at the fresh issue, that one will consist of about 73.74 lakh equity shares, which could amount to or aggregate to about 542 crore rupees. And if you look at the OFS part, that could include about 44 lakh 50,000 odd shares, which amounts to about 327 crore rupees. Now, the price band, we are given to understand, ranges from 695 to 735 rupees per share. And we're looking at big names from the anchor book that was subscribed. We saw Singapore government, Abu Dhabi's investment authority, Goldman Sachs, all of those bigger names that have shown interest and have subscribed, at least in the anchor anchor investors for this stock so far. So let's discuss how this IPO is going to really transpire and what it's going to see. We'll see that listing happen at around 10 a.m. But joining me to discuss the prospects of what it has in the markets right now, and given the fact that there is much euphoria in the initial public offering so far, joining me to do that is Lekha Badlani from our Moneycontrol Pro team. Thanks so much, Lekha, for speaking with us this morning. Another day, another IPO, we could say, because that's what we are seeing so far, at least in the primary markets, a lot of buzz. But tell us more about Jupiter Hospitals and how that one's prospects are.
Hi, Stacy. Yeah, good morning. So Jupiter Hospitals is, actually is based in the western region of the country, and they own 3 hospitals currently with a bed capacity of close to 1,200, and they're currently working on its 4th hospital in Dombivli, Maharashtra. So, if I want to highlight the key, key prospects of the company has shown strong CAGR, in terms of revenue of about 35% and a strong EBITDA CAGR of 72% in the last 2 years. Their EBITDA margin has also improved from 15% in FY21 to 24% in FY23. Their occupancy level remains in line with the industry average, and their cash conversion ratio, which is close to 80% for the past 2 years. So this is a very healthy number in our view. Also, their institutional share of the revenues, which is just about 1%. So we think that will also support the ARPOB at a higher level for the company. So this is these are the few points that we like about the company.
Lekha, what about the price band? What would you say? Is it fairly reasonable, and the valuation for the company, given that it's not such a big, just about 3 hospitals and another one coming? So how is the price band? Is it justified?
Yeah, so the offer price is implying that the company would be valued at around 24 times EV/EBITDA on the FY23 numbers. So this is, close to the industry average, where most of the players are, close to the peak. So this leaves, little room for re-rating from here. But what we like is, if you see the disparity in the, in the Mumbai metropolitan region and the western region. So with in terms of population and the healthcare infrastructure, so there's a huge disparity there. And so we think the company can really, cement its footprint in the region. So we would advise investors to subscribe to the issue.
Lekha, any risk factors that investors should also be looking out for when it comes to this particular stock?
There are a couple of points, but I wouldn't say there are concerns as such. So their Indore hospital is currently working at lower occupancy, and they have also lower ARPOB compared to its other mature hospitals. So their occupancy is also just about 40% currently. So which could be like a weak point at present, but we see it as there's a lot of opportunity for this facility to scale up in the future. And secondly, their debt to equity ratio, which is about 1.3 times, which is above the industry average of just 0.6 times. But the company plans to utilize majority of their IPO proceeds, towards debt repayment. So we think that should also, be fine in the in future.
Right. Well, thanks so much, Lekha, for giving us your perspective on how Jupiter will really come off with this IPO. And given the disparity we have with our health infra and the kind of population, there is always a scope for these kind of companies to, grow further ahead. And at least that's what the hope is. But we will see how it really transpires. It has got quite a bit of traction, at least in its subscription numbers, if you have to go by that. Also, the grey market premium that it was commanding seemed quite positive. So we'll have to see how that really plays out. But thanks so much, Lekha, for giving us your time here. Well, let's also tell you that ahead of this mega G20 event in Delhi, we did have Prime Minister Narendra Modi, who spoke exclusively to Moneycontrol about G20, about various global issues and where India really stands in, and also the economy and many other issues. Well, just before we leave this show, we will leave you with some excerpts of that interview, and you can catch that whole interview right here on moneycontrol.com. You can have a look at the excerpts.
The biggest interview of the year. Prime Minister Modi speaks to Moneycontrol. Ahead of the G20 summit, India's place in a multipolar world. The war against inflation. India's technology and human capital. A Moneycontrol mega exclusive.